How bad is bad? This is Bill Scheid from Applied Finance Research with an analysis of all the S&P 500 bear markets from 1900 to 2025. In the book that I'm co-authoring with R.J. Hickson, the former VP of the Van Tharp Institute, we are applying a systems thinking lens to the beliefs and results that come from buy and hold investing. And in a recent video, I shared these data here in which we asked the question, how long do you need to buy and hold the S&P 500 to have a 2 out of 3 chance of earning 6% per year? So we did an analysis of various holding periods going all the way back to 1900 and running through 2025. And we found that to have a 2 out of 3 chance of making 6% per year, you have to hold the S&P for 30 years. If you hold for anything shorter than that, your chances move towards 50%. Now, this research naturally raises the next question: what kind of drawdowns do you have to live through in order to make your 6%? So to answer that question, we looked at every bear market of 20% or more from 1900 to 2025 on the S&P 500 using data from TradingView. Now, we found that there were 13 bear markets of 20% or more between 1900 and 2025. Here in this column, we have the start dates and we have the end dates. And it turns out that on average, we have one bear market of this magnitude every 9 years and 7 months. So let's call it every 10 years. Now, the depth of these bear markets on a month-end basis on average is 37.5%, with the worst one being during the Great Depression, 84.2% depth, and it lasted 24 years and 11 months. That's the length here is how long it takes to get back to even. So from peak to trough and back up to the prior peak. Some of these other bear markets are pretty rough. The 46.2% between 1972 and 1980 that lasted for almost 8 years. Of course, we have the dot-com bubble, 46.3%. That one lasted 6 years and 9 months and finished in May 2007. And then just 5 months later, the market went right into the great financial crisis and dropped 52.6%. So when we average the depth, we have 37.5% on average for all 13 of these bear markets. And when we average the length, we come out to 5 years and 11 months. So to answer the question, what kind of bear markets do you have to go through in 30 years to make your 6%? Well, if there's one every 10 years, that's 3 bear markets of an average depth of 37.5%, and it's going to take about 6 years round trip to get back to even. So that means every 10 years you're going to hit one of these bear markets, and it's going to take 6 years to go through that process, and then you'll have 4 years of profitability before you drop into the next bear market on average. For me, I think this is a very eye-opening, a very sobering look at the risks that come with buy and hold. And for me, it is a very clear reminder and really highlights why risk-managed systems thinking approaches are the way to go in the markets. This is Bill Scheid from Applied Finance Research. Thank you very much for watching, and happy investing.